Welcome to today's IVG Market Blast. I'm Brad Alexander, and today we will take a look at Forex trading on gold, the DAX40, the S&P 500, and WTI Crude Oil. Just a reminder that these videos are only an observation of current market conditions, and these are not to be construed as trading advice. And don't forget to like, subscribe, and keep up to date. Well, it's been quite a few chaotic days with the US and Israel attacking Iran. Logically, the first thing to look at is the price of crude oil whenever we see Middle East disruption. In this case, we see the Strait of Hormuz pretty much shut down and the price of WTI crude oil opening with a huge gap on Monday morning. We can use the ruler feature on MatchTrader to see the extent with an 11.7% or a $7.88 jump in price. For you gap traders, this may be tempting to go short, but you need to watch the news. Increased tensions will see prices going up, while good news will see the gap being filled with prices falling. From the technical side, we see the stochastic oscillator falling, but it may just turn back up. MACD crossover is looking very overbought, but we need to see that cross and some good news before going short. As you can imagine, there was a gap to the downside on almost all global stock indices, and some exchanges remain shut due to safety concerns. The S&P 500 made some recovery with investors buying the dip, but we see price action falling again in the last few hours. From the technical side, we see the stochastic oscillator overbought and turning over, but here as well, watch for the news and updates on the Iran war. While most stock indices look like this, we see many, like the German DAX40, still falling. Obviously, the US-Iran war is hitting all stock markets, but there's a general risk-off mood globally. Thirdly, the DAX is getting hit harder than most, as many German companies are reporting poor results. And finally, Germany is heavily reliant on its exports, and slowing global demand combined with logistics disruptions and rising costs aren't helping. Of course, price action on gold is always affected by geopolitical events, and we see price action heading higher, approaching resistance with bullish confluence in our technical indicators. That's all for now. CFDs and FX are leveraged products, and your capital may be at risk.